Hi, guys. Welcome back to The Baseline. Thank you so much for joining me today. I hope everybody's having a great day. Today, we're going to talk about the dollar down, tariffs up, and the global power shuffle you're not ready for. So let's open with a reality check that might make your next cup of coffee seem a little bit bitter. What if the almighty United States dollar, the same dollar that backed oil deals, bailouts, secret offshore accounts, and the dream of every bond trader, is slowly losing its crown? And not because an enemy stormed the gate overnight, but because America is poking holes in its own wallet, so to speak. And it's happening one tariff at a time. So the currency that ruled for generations is quietly getting ghosted at the global party. And the new kids on the guest list, it's China, BRICS, and a cluster of nations politely muttering this sentence, right? They're saying, hey, I appreciate it, Uncle Sam, but we'll settle up in a different currency. So plenty of people throw the word de-dollarization around. They do it like it's a fringe conspiracy theory of some kind, cooked up by some type of keyword warrior. But it's not fiction, it's real. And not total, not overnight, but it's real. And about 58% of global foreign exchange reserves are still parked in United States dollars. 2 decades ago, though, it was over 70%. That slow decline says more than 1,000 official statements ever could. Russia dumped the dollar for rubles, and they're trading in yuan in much of its energy trades, right? So China's busy stitching direct currency swap lines with any country that'll pick up the phone. And some Gulf states still smile for the camera when the dollars roll in. But they're experimenting too. Oil for yuan, local deals, barter where it makes the most sense. It's the polite version of breaking up with your boyfriend or girlfriend, right? You don't just slam the door on them. You just stop sending roses every payday. So this is why it's happening now. Why is this happening now? That really ends up being the big question. Why is the dollar's grip slipping when nobody's declared an outright currency war? Now, one word is tariffs. So when tariffs, or when Trump first floated his 10% tariff on everything line, all those years ago, it sounded like a bluff. But here we are again. New proposals on the table that range from 10% to 60% on imports that keep big box shelves stocked and your phone charges cheap. But bits of it are already real in 2025 alone. New tariffs have landed on electric vehicles, semiconductors, cheap textiles. Vietnam's in the rumor mill too, guys. Taiwan, same story. The White House hasn't mailed out ultimatums to anyone, not yet, but the threats are certainly hanging in the air like storm clouds over a 4th of July barbecue. So cutting imports makes sense on paper if you want domestic factories humming. But here's the thing. If you don't have domestic factories ready to replace what you just blocked, you're just inflating those prices. So that next iPad, it's not coming down in price. Those new shoes, they're not going to be any cheaper. And people end up paying more for the same thing. And every extra dollar squeezed out of wallets means one less spent somewhere else. So that brings us to this point, right? And where it all ties back to the dollar and its throne. The United States runs a massive trade deficit, and it has for decades. I don't think that's a secret, but that's how dollars flood the world. American consumers vacuum up cheap goods. Dollars fly overseas. Other countries stash them in their reserves. Now, tariffs flip that flow, right? So fewer goods are coming in, fewer dollars pour out, and less green paper for the global economy to hoard. So what do countries do? They adapt. They trade in local currencies. They swap yuan. They test payment rails that don't involve New York banks at all. And the U.S. goods and service deficit hasn't collapsed, but it is tightening. And it's sitting somewhere around 73 billion as of mid-year, I think. So it's not a cliff drop, but it certainly is a signal. The world's dollar tap is trickling down. And that matters more than any press conference that we're ever going to watch. So whenever the Treasury Secretary stands up and swears, right, something, and you've heard this statement, we have a strong dollar policy. Most people, including me sometimes, just nod their head along, right? But what does it actually mean? It doesn't mean a strong dollar today or tomorrow or even next quarter. It means the United States wants the dollar to stay the world's preferred reserve currency, even if that means letting it dip now and then to help American exporters sell a few more tractors and semiconductors later. So a dollar too strong chokes exports. A dollar too weak sparks inflation and panic. So what's the plan here? Keep the crown at all costs, but the crown's heavy right now. And these days, the weight's shifting. So what is the China angle in all this? What if we flip the map and see what China is doing? Well, China is playing a much longer game. They really don't want the renminbi to be the next global reserve the same way that the dollar is. There's way too many headaches involved in that. So they know once capital's fully free to move, their billionaires will ship it out faster than they could ship plastic to toys at Walmart, right? So they're not trying to replace the dollar in your savings account. What they're trying to do is build a world where they can trade without the dollar altogether. So energy deals, commodity swaps, infrastructure loans, they're trying to do it and get it all done with as few greenbacks involved as possible. Now, 10 years ago, BRICS bloc barely scratched 400 billion in internal trade. But since the Ukraine war, over 700 billion, guys. Cheap oil, cut rate tech, fertilizer deals, they don't need Wall Street's permission slip anymore. So as we're talking about energy and what China's doing, we have to talk about what China's doing with solar. And this goes deeper than spreadsheets because money rules the world, but energy decides who mints the money. So China's solar expansion isn't a feel-good sustainability stunt. It's a hard power energy reserve, right? 2024, China's solar output hovered somewhere between 500 and 600 terawatts per hour, right? The United States, less than half of that. The gap feeds China's chip plants, data centers, and heavy industries at prices American factories just can't touch. So solar equals cheap electricity. Cheap electricity means cheap chips. Cheap chips mean the rest of the world stays plugged into China's supply chain. And the dollar shrinks again a little bit more. And each time someone wires payment in renminbi instead of the United States dollar becomes problematic. And the United States has another thing. It has a debt monster, a big monster lurking in the basement. Because back here at home, there's a shadow that doesn't get enough headlines or national news, and that's our debt. The national debt, roughly 37 trillion and growing. High interest rates mean Uncle Sam's interest payments alone outmuscle entire federal departments. And the fresh tax and spend package, whether it's real or rumored, adds a fresh layer of debt frosting. So if the projections land, the new plan might add another 3 to 4 trillion to the deficit over the next decade. Some of it fuels growth. Some of it cuts checks that mostly circle back to those who already have a head start. And when those folks get tax breaks, when rich people get tax breaks, they don't all spend it in groceries or at the shopping mall. They shovel it into stocks and bonds and land, gold, anything that can outpace the rate of inflation so they can generate compound returns. So the gap widens, the dollar floats, but more people feel like it's slipping through their hands. So comes the next aspect of all of this, right? And here it is, which is tariffs pinch supply chains. Higher prices hammer middle income spending, and tax cuts keep the asset class hot, and real wages struggle to keep up. So what happens is two Americas grow even further apart. One stacking up stocks and land, and the other is stretching every paycheck just to fill the fridge and keep the lights on. So the dollar's not collapsing tomorrow, but bit by bit, this system, tariffs abroad, bifurcation at home, pulls threads the whole world's been trusting for 70 years. So this is the real pivot moment. The dollar's crown is safe for now, but the shine's not what it really used to be. Tariffs look strong in campaign speeches, but they are shaky in a supply chain spreadsheet. Solar panels and bilateral trade deals aren't toppling Washington or the United States overnight, but they're planting seeds that sprout slow and deep. And one day, someone will ask, how did this all happen? And it didn't happen in a single meltdown. It happened in 1,000 tiny choices. Trade wars, tax cuts, energy deals, quiet side arrangements and agreements. Nobody headlines until they're absolutely irreversible. The dollar's still the king, but the palace is drafty. And more people every year are quietly sneaking out the back door. So what do you guys think? Leave a comment in the section below. Do I have this wrong? Is my math wrong or my concepts wrong? Let me know. And I'll look forward to, of course, to seeing you guys on the next episode of The Baseline. All right. Cheers, everybody.